Most traders overcomplicate this market. They jump from strategy to strategy, time frame to time frame, looking for the next magic confirmation. And that's usually why they struggle. In this video, I'm not showing anything fancy. No indicators, no secrets, just how I took plus 5R in about 2 hours. Using liquidity, supply, and demand, all from the 30-minute time frame as higher time frame and 1-minute confirmation entry. What matters here isn't the R number, it's the process, how the levels were marked, why price reacted, and just as important, what I ignored. If you are tired of chasing setups and want to see how a clean, repeatable session actually looks like, watch this carefully. First of all, let's state the obvious. As you can see, price was creating. If we start from here, high, low, higher high, lower low, higher high, lower low, as you can see, and higher high, lower low, and this was the recent high. Let me zoom in for you. As you can see, price made lower high, then price broke structure. What we also notice is during Asian range, if you go to 15 minutes, let me show you 15 minutes. After breaking structure, price created liquidity built up during Asian range, then went up, took Asian high. Price needed to come back to take out Asian low and mitigate a point of interest around here. As you can see, we can even refine it in 15 minutes. Price would have still mitigated. I don't like to complicate things. What you see is what I actually trade and teach. My most important criteria is break structure, which we have here, leaving behind an imbalance and a point of interest. You can call it a demand in a bullish order block. It doesn't matter. A liquidity before the point of interest is mitigated, and inducement move. An inducement move grabbing traders on the wrong side of the market. As soon as you see these Moroboso or Victor candles, you instantly imagine that price is bearish and this point of interest will hold. But actually, price was going up in a structured way, as you can see, inducing traders on the wrong side. Let me show you how I entered, which is also one of the simplest entries, a change of character. As soon as price mitigates my point of interest on the higher time frame, what I do is look on the left like this. We have low, lower high, as you can see, lower low, lower high, and then we have here lower low, lower high, price mitigated. This becomes my change of character. If the price closes above this candle, then a strong change of character happens, which indicates price is ready to reverse. My fixed target is exactly 1 to 5 risk to reward ratio. I mark the most extreme point of interest with imbalance. Sometimes point of interest is a little bit far from the swing high or low. In this case, swing low over here, as you can see. So I covered the low with my stop loss to avoid weak, and this was a winner, as you can see. If you are wondering how I mark these levels, I post daily markups on my private group exactly where I am interested. Most people assume they are signals. They are not. They are showing you where I'm interested and why. Inside the mentorship, I teach this exact model step by step. It's a mechanical edge backed by 100 locked trades in Notion, so you can study it, repeat it, and apply it yourself. Most readers understand the framework within a week. Execution comes after. If you want access, check the description and DM me. Only couple spots left. When its full price increases. Let me know if you got any value from this video in the comment section.